on my stocks to watch list, the first one is where all the action is. Swiggy is the first one I've picked, and there are so many triggers actually, but I'm going with this Bernstein note on it. They've initiated an outperform and set a target of 635 rupees on Swiggy. They say this is going to be one of the winners in India's convenience economy. I love that term, convenience economy. It just explains so well what we're seeing right now. India's second largest online food delivery company with a 42% market share is what this describes Swiggy as. They say they expect to deliver over 90% CAGR growth in FY25 to 27. 90% CAGR growth. I mean, that's quite an impressive number. Medium-term growth led by new categories and tier 2 plus cities. Adjusted EBITDA margins will be expanding 4% by FY30, and they expect Swiggy to hold market share despite rising competition. Swiggy trades at 52% discount to Zomato on EV to sales, discount to shrink over time. So that's the catch-up factor over there. Just a couple of things, Neeraj, and I'd like to get your view as well. What happens when, I'm not even saying if, when a Zepto lists to this whole picture? And the second thing is what they've been doing since yesterday. So Swiggy has actually launched a new vertical yesterday where you can book professionals. They've entered this marketplace for the first time. You can book the services of a yoga instructor, beautician, an electrician, plumber, etc. So again, another foray there. And then everyone jumping into this 15-minute delivery.
Yeah, for food as well now.
For food. Do you really need your food in 15 minutes flat? I mean, I don't know.
You know, actually, Tamanna, I dare say it might not be a bad one, simply because a lot of times, for us, for example, sometimes we realize when we don't have food that, oh, we've not carried food from home. And
there's no time.
And there's a show coming up in half an hour.
Yeah.
Okay, I need food very quickly. Where do I get it from? Oh, I don't have it. But if this works.
Yeah, this entire office is doing exactly this.
Exactly.
So all right. So the 15-minute, fastest race is here. Is it good for your waistline and your wallet? Possibly not. Is it good for a Swiggy and Zomato? Definitely yes. So that's one to watch, and that's one on my radar as well. United Breweries is the other one I'm looking at, and I would say United Breweries and some of the other Alco Bev stocks should be looked at as well. But let's start with this. This is of course bad news for UBL. Telangana Beverage Corp has not revised basic prices of the company's beer since 2019 and 2020. Significant overdues remain unpaid by Telangana Beverages Corp. TSBCL is conducting liquor wholesale trade on behalf of Telangana government. Now, the way it works in Telangana is that this Telangana Beverages Corp is the one that conducts the wholesale trade, and they determine the prices. So, prices of alcohol in that sense are governed by the local government, and there is an ongoing tussle. In fact, there is a statement which has come in from the excise minister in Telangana saying that United Breweries has been pushing on the back of its monopoly, and they're not going to allow them to increase prices of their beverages, their alcoholic beverages. This is definitely a thumbs down. Already the stock took a 4% knock yesterday. Could be further because the statement has come from the Telangana state minister after market hours. And I wonder if this could be a positive maybe for some of the other Alcobev players, because if the 70% market share player is saying now that they might suspend operations there, they're trying to play hardball, does that give a benefit to others? So UBL is one stock that I would watch out for. The third one was PN Gadgil Jewellers. And so a couple of things here. One, consumption story has a bit of a cloud on it right now, not in the premium category. This was anyway a good quarter for a jewelry company because of wedding season, etc. But look at the numbers that they've put out. The Q3 retail segment revenue is up 42% year on year. Q3 franchise segment revenue up 87% year on year because they're expanding fast. So that's a good number. E-commerce segment revenues up 98% year on year. And you can take into account that bases would be lower. But the diamond category revenue also up 40%. And that's the one with a good margin. So I think you might see some positivity on this as well. And come in with your three. And then I just wanted to add one interesting brokerage note I saw. But then you start with yours.
Yeah. So Tata Motors, Tamanna, I thought was interesting because it's difficult to call this one. But The numbers have largely been in line according to me. JLR wholesales up 3% at 1.04 lakh units. So that's largely in line. Retail's down 3%, fine. The thing is, I think this is the mix for Tata Motors is changing well. And I think the mix being towards the higher margin variants now of Land Rover aids free cash flow meaningfully for Tata Motors. And that's the same thing that's happened this time around as well. Maybe the street might take this positively and not negatively. So keep Tata Motors in mind. Keep SRF and Navin Fluorine in mind. That's the second set of stocks on my radar. There's a sharp surge in global refrigerant gas prices. Now, what this does, according to a note, is that I've not given graphics, so viewers will need to hear me. Every $1 per kg change in the realizations could increase SRF's EBITDA by about 260 crores. For Navin Fluorine, it could result in incremental EBITDA of 77 crores. Both have additional capacities coming up, but that's for later. For now, just this upsurge in gas prices could mean an uptick in EBITDA. Unfortunately, both the managements don't talk to media else, but we'll of course try and get comments from them. But watch out, if there is a reaction, you would know why that is happening. So that's two. And there are more, but the third one that I have on my list, and then I have a couple of more after Tamanna gets done with her brokerage note as well. But Novelis could be, and Hindalco could be interesting, because Novelis has indicated that the Q3 FY25 EBITDA could range in the $360-370 million range, which is a 21% downtick. The reason why this number, I mean, the important part about this number is that it's down about 21% quarter on quarter. So not a very good picture painted by Novelis. Now, MK, for example, says that the Novelis pain is likely to persist for the next 2 or 3 quarters at least. CRS on its hand says that Hindalco's stock price weakness factors in this pain from Novelis. So I would suspect that despite everything that CLS is saying, the stock could start off lower today. Will it have a very sharp correction? Maybe not, because it's already been languishing, so to say, and some of this weakness is known. But because this number is so weak, I would suspect that the stock could correct a little bit. So watch out for that.
Hindalco, definitely. And metals have been having a tough time.
Yeah.
In any case, I would say, I don't know if you can pull up the a nifty metals index and just look at what it's doing in the last 3 months or this last 6 months. But metals has generally been tough going, and there you have it, about 13%, 14% down in the last 6 months. Now, I just wanted to talk very quickly about Ganesha Ecosphere, because of all the brokerage notes and flashes that we put out every day, this caught my eye. Antique Broking has reiterated a buy on Ganesha Ecosphere with an upside of nearly 50%. They've set a target price of 2,770 rupees for this. They say that the company is all set to ride the upcoming PET recycling wave by leveraging capacity. They believe successful ramp-up of South plant will lead to continued stock re-rating. They expect volumes and revenue CAGR of 24 and 26% respectively over FY24 to 27. And they expect the FY24 EPS, that's earning per share, to increase 4.9 times in FY27. So I think that's one that you can put on your radar as well. But the HSBC view, Neeraj, this means that you need to pick stocks. You can't just stick on the Nifty and hope for the best.
You can't. But just before we get to the HSBC view, Tamanna, just very quickly, I just want to make one small clarification on Pratap Snacks, because I think the street might get excited, but this was known. So in Pratap Snacks, there is an LOA for a formal open offer from Autham Investment and Mai Madhusudan Kela. And because Autham, Arpit Khandelwal and Mai Madhusudan Kela, means Madhu Kela's name gets involved, the street might get excited, look at the numbers and look at the offer price and think what happened here. This deal was done at 750, and this was well known that the open offer is coming for sure. So don't get excited by this. There's no news and therefore no big development. So bear that in mind.